Good morning, everybody. It's Chris Robinson, Robin's Ag Marketing, with today's pre-opening grain and livestock comments. First of all, hopefully you got the weekly wrap and also my it's about a 20-minute webinar where I went through where we are this year and our sales, where we are with our hedges, what we're looking at here. You know, the big question coming up on the report tomorrow is going to be, what's the carryout for corn, and what is the acres? I think it's pretty agreed that we've got good carryout for both corn and beans, and it's going to come down to, did we get an acre shift? Over the weekend we got rain. I just got to lead off with this. Just one more reason to absolutely, positively, watch out when you're trading the overnight grain markets. We'll see where we are today, but I've seen this time and time again where, it's a Sunday night, nobody's out there trading, and here we are, D's corn's going down and retesting its low, 432. The old low was 431. We're trading at 433 right now. July went down to 403.5. Again, the recent low. I've talked about this in my letter. We had a good rebound. We had a key reversal. Looked like the market was trying to turn around. Really, it just comes down to what happens on this acres report and the weather. So, yeah, the market's oversold, but it doesn't mean it can't go lower. And I did point out the fact time and time again with all my clients that there's still 30 cents worth of risk in corn, just based on what the charts are telling us. There's 50 cents worth of risk in wheat, and there's $1 worth of risk in soybeans if we go back to where we were at the beginning of the year. The low for November beans in January was 10.55. We're at 11.46 this morning. The high this morning was 11.55. So if you don't have any hedges on, please take a look at getting some short-dated ones on. I don't want to be in a situation where guys are, kicking holes in the wall next week because, we had a sharp correction here. I'm hoping for a recovery. I'm hoping for a rally. That's why anybody that made cash sales higher, I do have cheap calls on, but hope is not a good plan here if we go sideways. So I can't stress that enough. We're trying to manage risk. People want somebody that tells them where the highs and the lows are. I look at it this way. You're a farmer, you're a producer, you're always bet long. So you're always bullish. You need to keep your upside open and defend your downside. We'll see today in cattle. Can we move above the recent trading range? It's got to be 250 in August and also 375 in August feeders. Those are the two numbers. 375 August feeders, 250 August fats. And finishing up with lean hogs. Still under pressure even after a positive hog and pig report. July, if it takes out 92, it's a hop, skip, and a jump back down to 89 or 90, which was the original contract low way back. So there's risk out there. Keep your risk on paper. Crude oil, we didn't go bananas. It's trading at 71. I think a lot of people thought that maybe we'd go bananas based on what's going on in that part of the world. But we know now at this point, after over 100 days of this, that story changes every 10 minutes. I did go over silver in the letter. We're trading here at $58. 55 and change was the recent low. The next risk there probably is $50 just because markets like to go to round numbers. All right, guys, you got to focus on these grains, though. Hopefully the report tomorrow is bullish. If it's not, please have some sort of protection on. And in the weekly wrap, I listed them out. I listed out cheap calls and cheap puts. Give me a call. Thanks. 312-638-8868.